Are you ready?
Ready.
All right, let's go. Kevin here, top 100 financial advisor and best-selling author. We are here to talk about the stock market. Over the last few weeks, we have been pouring through earnings season. For those who may not know or are new to the channel, earnings season is when the majority of companies come out and tell us their earnings. That is how well they did, how much stuff they sold, are they going in an upward trajectory and are things fine with the business or not. And these are very significant times for investors to sit down, listen, learn, and perhaps kind of make some assertions and some educated guesses about how we feel about owning the stock moving into the future. Today, I want to pull out about 3 things. I would say probably the top 3 things that I learned, and I think you should, just take this information and kind of put it in your notebook and then see if it helps you to come to a clearer investment decision here in the next few weeks. All right, so dozens, and I mean dozens of companies came out and said, hey, here's how we're doing. Okay, some of this information was good. Some of this information, depending on who you are, is not all that great. So the first thing that stood out to me was Amazon. Amazon barely made a profit in the year 2022. Okay, this is not Amazon in 1997. This is not Amazon in 2000. This is Amazon in 2022. That is an issue for me because, again, they've been established. You're out here buying all these companies, doing all this stuff. You're one of the world's biggest employers. You would expect them to at least be profitable. You may not be as profitable as last year, the year before, but for you to barely crack a profit is an issue. I want to illustrate this by giving you the last 5 quarters of profit. Okay, last 5 quarters of profit, starting in September of 2021. $3.16 billion. Okay, September 2021, $3.6 billion. Then you move into the next quarter and they have $14 billion. It's a record for quarterly profit. You go from 3.16 to 14. That's huge. Then the very next quarter after that, you are negative. So they lost $3.84 billion. Then again, they lost 2.03, so basically $2 billion in losses. Then they were profitable by 2.8 billion, and then a measly profit in the final quarter of $278 million. Now think about that. You're profitable by 3 billion, then 14, then you lose close to 4, then you lose 2, then you make almost 3, and then your last quarter, which is supposed to be the holiday shopping season, it's supposed to be the best season of the year for you if you're Amazon or any retailer, and you only pull in $278 million. Now, the other interesting thing that has been concerning me about Amazon as a shareholder, and I've been saying this for a while, is that Amazon has not performed well. If I go all the way back to January 1st of 2021, okay, we're talking 2 years now, 2021 and 2022 and going into 2023, they are negative 30%. You lost 30% in Amazon in 2 years. If I compare this to, I don't know, Apple or Microsoft, I'm still making money with those 2 tech companies. So for them to be, in that untouchable, quote unquote, tech space, they can do no wrong in terms of for investors. That hasn't been the case. I've been saying this for a while. It hasn't been the case for a while. Now, that being said, so far this year to date, January 2023 to right about now, Amazon is up like 15%. So it's kind of a mixed bag. Last 2 years have been negative. I'll give you 1 year, right? I'll give you 2022. We can write that off. What was your excuse before that in 2021, right after the pandemic, or at least the height of the pandemic? So it's extremely interesting. They have been making a lot of purchases. They also did do those layoffs. And my other concern here is that I've been saying for a while, they've been spreading themselves thin. You are now a vacuum company and a movie company and a streaming company and a logistics company and an electric car company because they had shares of Revvion and they're using them to do their deliveries. They're doing a lot, and they're a cloud services company with AWS. They are doing a lot, and it was fine. It was, but again, 2 straight years of declines. We'll see. Now, 2023, again, you're up 15% already. That's a great start. Perhaps that's all alleviated in just 1 year. We will see. But the fact that their sales for a company that's this big, this established, and has been around for this long, it's just odd for a company to go from a $14 billion profit in just a quarter and then start losing money and then only just eke out $278 million. It's concerning. Now, others will say, It's Amazon. They are undefeated and nothing wrong could ever happen with them. I mean, that's fair, right? But I did sell off a good chunk of my Amazon. But because of that reason, because of that, call it bias or past history, I got just a little sliver left in my portfolio, and we'll see whether or not I continue to keep it or not. But it's just interesting to kind of see how their finances, their income, their net profit, or the profit that they have at the end of the day, has fluctuated by this degree. You would expect, if I look at Apple, Microsoft, any other competitor in the tech space, because Amazon sees itself as tech, you don't really see this variability. You might see a little loss here or there, but these are giant swings. So that was incredibly interesting. Next one here is Apple, and you have probably heard this stat, but Apple, for the first time since 2016, has seen a drop in sales. And actually, to correct that point, they saw a 5% drop in sales, which was the biggest drop since 2016. Now, this is a little concerning because Apple, again, was in that category of untouchable tech stock. Nothing can go wrong. They were the only tech company so far, at least only big tech company, that hasn't done any layoffs. Talked about Meta. We talked about Amazon. We have talked about Alphabet doing layoffs. I think I mentioned Microsoft already. They haven't done none of that. In fact, the CEO took a pay cut to ensure they could keep his employees, which I think is a very good move. However, right, the stock is still down, or it was down in 2022, which I think, again, I'll give everybody an excuse for that one. But the fact that they did see a drop in sales is like, interesting. Now, the CEO, Tim Cook, says that it was, the economic situation last year, plus international issues, currency exchanges. When they say currency exchanges and foreign currency risk, is basically the American dollar is worth more or less. So even though I sell the same amount of stuff, but because of inflation and how the currency translates, I technically made less on paper. That's what he says. He says if you didn't account for that, then we actually would have made more money. That's fine, but it's still, you sold less money. And all I'm looking at is, if I'm looking at your balance sheet, or really if I'm looking at your income statement, you made less. Some people say that it's a saturated market, right? Everybody who has an iPhone, or everybody who is going to have an iPhone has one now. I'm good. I don't need to buy a brand new phone every single year. That is true. Saturation is a thing, meaning everybody got it. You can only grow but so much. But they would argue that this is why they've been doing all the add-on services. This is why they have Apple TV and that streaming service, why they have iTunes, why they have all of these little things, so that you may not buy another phone for another 2 or 3 years, but they're going to get that money, whether you are using Apple Pay, any of their iCloud services, and things of that nature. That is their objective. We will see if that is going to continue to boost the company moving forward. Apple is also up this year, but again, obviously last year they were down, and then they seem to be slowing down in terms of their revenue growth, the money that they are bringing in. I'm not overly concerned here. If I am to compare Apple to Amazon, I would say I am at like a 7 for Amazon, as what in the world are you doing, and maybe like a 3 for Apple. It's one drop, right? It's the biggest drop since 2016. They've survived it, right? The last time this happened, 2016, they survived it. They were fine. Amazon, again, this is 2 years in running. We'll see what happens the rest of this year. Now, last thing here is this. The S&P 500 year to date, from the time I'm doing this, because I'm doing this on a Tuesday, is up 7.29%. Now, all the stuff I just told you, all the stuff that you already know this year about inflation, higher interest rates, the risk of recession, all this stuff, the market is still up 7%. This is why I've said on multiple occasions that sometimes what we know and logic doesn't always match with the stock market. You would think if I see all these tech companies laying off people, if I see that, egg prices are high, and I keep kind of hitting on that point, you would expect that, hey, look, maybe the market will give us exactly what we saw in 2022. That has not been the case so far. It is still extremely early. So sometimes the market's going to do what it's going to do, which is why we are long-term investors anyway. It's why I still preach index funds. But also, there are some things that just do not make any sense at all. Another great example of this too, and this is just from what I've seen in earnings season and just what I've seen just in general, is Carvana. Y'all remember Carvana? We talked big trash about Carvana. Okay? And it was fair. We saw the numbers. We saw how bankrupt they were. However, if you look up a year-to-date chart on Carvana, they're up more than 100% this year. How, Sway? How? That is just because sometimes the market just doesn't make sense. Sometimes it becomes a meme stock and it's the best performing thing since sliced bread. That stuff happens, right? What we don't want to do is go and chase that information and go chase and just hope that it continues to do that, because the next day it could be down 20%. You never know. I don't know what it is today, but it may be up 200% by the time you watch this or not. So it definitely depends. But sometimes you just want to add this to your notebook. Doesn't necessarily mean that we have to act. For me, y'all know I still hold Apple. For me, y'all know I still own Alphabet and Google, which is what we talked about yesterday. And then I still own my index fund. So it's not necessarily a let me move point. But for me, I'm not so bullish on Amazon. And I have 2 years of history, which is not the longest history in the world. I get that. But they're just not working for me. Okay. Yes, the last 2 months, but I'm really comparing 2 months to 2 years. Is this an anomaly now? Right? Is 2023 just like the golden year for them and it goes back to normal, which was 2021 and 2022? Or are they going to do something different? Because you have to remember, in 2020, which was that breakout year, that was the pandemic. You don't want to make the pandemic your anchor and say this is normal and just say, like, if it goes back to normal, it's going to go back to 2020. That's not true, right? I would say that 2021 and 2022 are probably closer to normal, only because, and it's not the 100% normal, but closer to normal because they have already made a lot of these purchases and their expenses are higher. And that is going to be an issue that is relatively constant. 2019 is a good case study too. That was before MGM. That was before Prime Video is as popular as it is today. Like, they have a lot more things they have to pay for that they didn't have to pay for in 2019. So we will see if the stock responds to that. We will see if the stock gives us 2018-19 numbers in terms of return, or is it going to go back to what we saw the last 2 years, or is it going to be completely different in 2023? That is something that I'm interested in learning for Amazon. All right, that is it for me today. We got some other remarks from Jay Powell that will likely come out, probably coming out right now as I speak. So we'll talk about those as well. If you have any other topics or things you want us to discuss, make sure that you put that in the comments below. Also, you want to make sure that you join our members only. We do exclusive deep dive breakdowns each and every week. All right, that's it for me. Talk to you later.